All right. So this is strategy 2, lesson 9. Yeah. Lesson 9, strategy 2, the IBO, or the IBO stands for the initial breakout. So this is a very easy strategy to find. You'll see it a lot, and it will be one of your most commonly traded strategies. Out of 3, there's 3 that will be relatively equally traded: the IBO, the CBO, the WTF. You know, so but yeah, this is relatively pretty easy to find. Super clean, has a lot of confirmation. It's a really good strategy, and the characteristics for it are pretty simple. So it builds on the ABO, right? So we had a wave 1 breakout. Oh, sorry, this is right. So these are ABO nodes, IBO nodes. There we go. So it's very similar that we had a wave 1 breakout, so now we're trying to capture a wave 3 run, right? And the ABO was we need major support and resistance on a higher time frame. Well, for the IBO, we need to have a rejection of major/minor support and resistance on a higher time frame. Now I added the minor because the IBO has a little bit more confirmation than the advanced breakout. So the advanced breakout, we only kind of want to trade off of major higher time frame support and resistance levels. The IBO, it has a little bit more confirmation. It's nice to have a major level, but sometimes there are minor levels that are fine and everything else looks great. So we need a rejection. So those levels need to be rejected with something, some sort of a candlestick reversal pattern, right? Any of them, combination of them, anything, but it needs to be rejected. Price action needs to hit it, bounce, with a candlestick. So rejection of a major/minor support/resistance on higher time frame. So yeah, we're capturing the wave 3 run. So we would have had a wave 1 breakout on a lower time frame as well, on a 1-hour chart. We would have had a trend change on a lower time frame. So this is a break and retest of the 1-hour 50 EMA, daily pivot, 0.32 Fibonacci retracement. So what does that look like? Well, let me show you a screenshot of the strategy, and then we'll go to our little drawing. So on a daily chart here, we have a bounce off of a minor support and resistance level. It's got some consolidation here. The price action was holding it probably on a lower time frame, 4-hour, 1-hour. Broke it, retested it probably on a 1-hour, 4-hour chart, dropped, and then broke out, maybe retested on a 1-hour/4-hour chart. So it's kind of like a minor support and resistance level. But price action was falling on a daily chart, hit this area, and closed with a bullish engulfing. So it's not like the ABO where we're trying to capture this reversal. This already had a reversal. So that's why you could have a minor level because you have that confirmation, you have that reversal candlestick, and in this case being a bullish engulfing. So that obviously gives me a bullish bias, a bullish direction prediction, right? The 1-hour chart, well, the 1-hour chart needs to say that, hey, this trend has changed. We had a wave 1 breakout, right? So the same thing, 1-hour chart has been trending down for quite some time, specifically recently. There's bullish MACD divergence, which means obviously trend needs to be changing. It's kind of like a falling wedge. You could have maybe traded this with an ABO, but it didn't really have anything too serious to say, hey, this is like a major level. So not really. But sometimes you can trade these falling wedges as well. Yeah, so price action broke out into wave 1 and a trend change, right? New highs, trend change, break of pattern, break of 1-hour 50 EMA, bullish MACD divergence, falling wedge breakout. It's just a breakout, wave 1 breakout. So we have a trend change. Cool, right? And so that's what I mean. It's easy to find because when we're making a watch list, we're just looking for this kind of 1-hour breakout and this daily reversal candlestick off of some sort of support and resistance. That's what we're looking for, right? When we're scanning. So it's very easy. You're just kind of looking for that pattern and you just 5 seconds on every single pair scanning through it. Yeah, so it's very easy to identify. Now the 4-hour chart kind of just again needs to confirm the bias, just like with the ABO. With every single strategy, the middle time frame of the analysis, daily, 4-hour, 1-hour, the middle time frame needs to be confirming that bias, needs to be confirming the daily bias, and needs to be confirming the 1 hour bias. You cannot be bearish. If we're looking to go long, go bullish, it cannot be bearish, you know. So the price action on a 4-hour chart needs to be favorable for our direction. And it was. We can see though that the 4-hour 50 EMA is like a major level, right? Major level. But then it pushed away from it, went into a falling wedge, and then it kind of broke out. And at the time of the entry, it's a higher low, you know, made it broke this high, so higher high, higher low. So we can say, yeah, it's bullish up to this 4-hour 50 EMA. After that, we don't know. You know, it's holding resistance. We don't know. It might break it, maybe not. You know, it didn't in the past. In the recent past, it's very strong. At some point, it will. But will this be it? I don't know. But we need room up to this 4-hour 50, right? Because that's our target. So it's confirming. It's good. Daily's good. 1 hour is good. And the 4 hours confirming that bias, right? And then what we need is this will be flagged on watch list at the start of the day. So at the start of the day was right here. We just had a breakout and like a few hours of bearish move, right? That's when the pivots form at the start of the day. That's when we run live events. That's when you should be making a watch list right at the start of the day. So this will be identified right there. It was identified right there. And then, yeah, we kind of want to break and retest of the EMA, right? So break and retest of the EMA, of the pivot, of 0.32. On a good setup, all this will be pretty nice and tight and close together. So trading the break and retest. So it needs to have a retracement to at least 0.32 Fibonacci, at least, you know, because that's value. That's starting to hit value area. Pivot is nice, and 1 hour 50 EMA is nice. If we get a retracement to all of it, that's great, you know. And if it lines up nice and tight like this, that's great. That's what we want. So pull back, a retracement to the value area. And then the target, it will typically kind of look like this, you know, 0.618, R1 if we're going long, R1 pivot, daily pivot, 1 hour 200 EMA will relatively be in roughly the same area. So we want to have a 2-to-1 somewhere into here. You know, if you can do 0.618, great. If you want to do R1, fine, you know, but it's roughly in this area. You need to have a 2-to-1. And that will always also be like below the 4-hour 50. We need to have a 2-to-1, right? From a position sizing perspective. Right, so that's our nodes. Nodes are simple, right? We have a wave 3 run that we're trying to capture, right? And we have a rejection of a major/minor level on a higher time frame. We have a 1 hour breakout on a lower time frame. We have a trend change on a lower time frame, and it's a break and retest of the 1 hour 50 daily pivot 0.32 Fibonacci retracement. Right, so we cover that. So now let's kind of go into our drawing a little bit, just for a different illustration. All right, and let's build on this ABO. So you see how this ABO, right there, see how this ABO broke above the 1 hour 50 EMA? Well, the IBO would have happened on the retest, you know, right there. So sometimes there will be an advanced breakout before, but sometimes it's not clear enough, we're not comfortable enough, so we just wait for the breakout and then we can trade the retest, right? So let me draw in another. Let's do maybe a head and shoulder pattern, right? Here is going to be our IBO. Right, so sometimes it's not always a descending triangle or a triangle pattern. Sometimes price can change with a head and shoulder. And then it breaks out. You know, so a lot of times it could be a head and shoulder pattern. And the shoulders could maybe be roughly the EMA. You know, a lot of times they could be. So price action is kind of bouncing on the EMA, falling, bounce of the EMA, fell, right shoulder. And you could sometimes try to catch a advanced breakout off of that right shoulder if it fits and it feels good, you know, and you feel comfortable with it. Because like I said, the advanced breakout always happens first. But then once it breaks out, then we're looking for the retracement. And in this case, it would be like, we can draw our fib all the way from the bottom. Typically fits a little bit better. because we're just going to call this like a wave one breakout. So broke out. And now what we want is we want to have this retracement to the confluence area, right? So, and that's going to be our entry. Once it retraces to the confluence area, or we're going to have one more thing here. We're going to have the pivot, which is typically going to be like starting somewhere here, you know, and there's going to be a pivot here. And the pivot will be, you know, just a regular gray color. And so we got 1 hour 50, pivot 0.382, roughly in the same area. And we're going to be targeting the 1 hour 200 slash the 4 hour 50 slash the 4 hour 50 EMA. So 1 hour 200, 4 hour 50, or sorry, slash R1 or 0.618 Fibonacci extension. So now that we're kind of entering this position, we want to plan it out, right? So before we enter, we want to plan it out. So entry would be around 0.382 Fibonacci, right? 1 to 1 needs to be to the highs or better, right? To the highs or better. Stop needs to be around 0.618 or better, you know? Could be a little bit less if necessary, but around 0.618 needs to be our stop loss. And so enter around 0.32 or better, stop around 0.618 or better, give or take. It can be less, you know, if it still fits, if 1 to 1 still fits and stop still feels all right. And then 2 to 1 up to the 1 hour 200, the 4 hour 50, R1, and .618 Fibonacci. This depends on where the pullback ends though, you know, so it depends on where the pullback ends. But it will all be roughly in the same area, unless the pullback is a little bit farther. But yeah, so that's kind of what we want this to look like, you know, and then once it pulls back to the value area and we can enter on a micro time frame trend change on a 2 minute, 1 minute, 30 second, 5 minute, 15 minute, depending on what we can get on a trend change, then we're looking to capture that ride. So that's the idea. 1 to 1 to the high, 2 to 1 to 1 hour 200, 4 hour 50, 0.618, and so on. Now let's have a look at our screenshot again. But first for the notes, right? So we were talking about it needs to be a break and retest of the 1 hour 50 EMA / daily pivot and 0.32 Fibonacci retracement, right? So and then target 1 to 1 to the lower time frame highs or lows, which we showed you that. 2 to 1 to the 4 hour 50 or 1 hour 200 or 0.618 Fibonacci extension or S1 R1 or better, roughly in that area. All that stuff will typically be in that same region, give or take a little bit, you know. And stop at around 0.618 Fibonacci retracement, right? So enter at 0.382, stop at 0.618, 1 to 1 to the highs, 2 to 1 to the EMAs, and so on. Now the entry happens on a micro time frame trend change at around 0.382 Fibonacci or better, right? So now let's look at our example here and go through the execution, right? So price action pulled back to that value area, pulled back to the EMA, right? And here it looked like it pulled back farther to 0.5, rejected all the levels and started to reverse with a low test. So low test reversal. So we should start to see some sort of a trend change. And maybe you could have gotten aggressive. I kind of jumped in on a 2 minute breakout right there at the value. So that's kind of where I jumped into this trade, and it was in the value area. You can see it again on the 1 hour screenshot on the 1 hour chart. It's right at around that 0.382, right? Entry. So it's in that value area, stop at 0.618, 1 to 1, green dotted line to the 1 hour highs or better, and 2 to 1 roughly in this area, give or take. If you can do 0.618, this would have been a +2 for me if I was able to do 0.618, which maybe I would have, maybe I could have. But roughly in that area, whatever you can do or better, right? So entry was that 2-minute breakout, and then nothing happened. Never broke out farther, consolidated a little bit, never broke out on a 15-minute, a little like this small stuff, not really a breakout. If you draw a pattern from the top, it didn't really fully break. So you just kind of want to make sure that you don't remove risk too early, because you don't want to chop it too early. You want price action to move in your favor before you start to remove risk. You want to be sure that price action is moving in your favor before you start to remove risk. A lot of times, this is kind of where people fuck this shit up, where they're a little bit scared of losing money. Fear gets in the way, and they tend to remove risk quicker, and it causes unnecessary losses, trades that ended up as losses that could have been wins. So you want to be patient with risk removal. You want to do it, you want to make sure you do it, but you want to make sure that you do it when you believe that those micro time frames, that 15-minute, 5-minute, 2-minute, but specifically that 15-minute, is now trending in your direction. That means that everything is trending in your direction, and the 1 hour is moving in your direction, right? You want to be fucking clear on that. You don't want to do it too early where you're not clear and you're just doing it because of fear. You want to remove some risk. You want to be fucking clear. This shit's breaking out on the micro time frames. The 15-minute is now bullish, right? So just make sure to have that conviction when you do P1. So I didn't have that right there. I'm like, well, not really, not yet. And that was still roughly around my entry price, not much farther. Like right here on a 2-minute, I was barely running at any profit. I'm like, well, it still feels a little bit too early. And the price action fell farther. And if I removed risk there, I would have been tapped out, because my stop would have been below this 15-minute low. I would have been tapped out, So you want to be sure. And then price action kind of double bottomed, but never broke out again. If it broke out, I would have clipped the lows, but it never broke out. So I'm like, well, I'm not sure yet. And then price action pulled back one more time. And then it finally, well, now when it broke this area, now I can be like, sure, yeah, this is fucking in a bullish trend, right? Once it finally broke. And that was, in this case, that was quite a few hours after I took the trade. It just consolidated, chop, 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 before news kicked in and price action broke out. So that's what I mean. When you want to be patient with risk removal, P1, P2, you want to be sure that this is moving in your direction before you do it. That's kind of like a major key. All right. And it's typically on like that 15-minute trend change or that trend breakout. Then P2, you can see in this case, it just kept on pushing on a 2-minute. It just kept on pushing and never retraced. So there was nothing to clip, no higher low. It just kept on pushing. So as it pushed farther and it kind of started to hit that 1-to-1 area, I'm like, well, I'm not going to have risk on the table now. It's sitting on 1 hour profit, so you definitely want to remove risk at that point. And you're still below every single EMA, 2-minute, 5-minute, 15, but at that point you want to remove risk and go to break even. If that happens, if it just kind of runs. And then it just kind of chopped around, and I was waiting for an exit here for about 1 hour. I think this was like a 1-minute trend. I exited on a 1-minute trend, so this was probably holding like a 1-minute 50 EMA. And I pushed a little bit farther, and eventually I did P3, and I kind of locked in 0.95 or something like that right there. And it ended up trending higher, right, on that 2-minute, or in this case 1 minute. It kept on trending higher, holding a trend, and then it broke that trend, and I was out manually. I just shut it down right there for 1.272. Like I said, if I could have position size for 2-to-1 2.618, this would have been a +2 versus 1.272. But not you can't always like kind of predict that, because like you don't know if it's going to consolidate, if it's going to fall farther, so you want to have a protected stop loss. And my default is typically like R1 or S1 if I'm going short. That's typically my default for 2-to-1 target placement. But hey, if I can do 0.618 or whatever sooner, I will, But yeah, 1.272, good trade. This is a perfect example of what you want. Position sizing, direction prediction. So direction prediction, 1 hour trend change, 4 hour confirmation. The value area is nice and tight. Target area is nice and tight. Position sizing fits 1-to-1 to the highs, 2-to-1 to that target area. Stop fits, entry fits. It's all just fits, you know. So you just kind of want to be taking this, doing this over and over and over again, you know. Patient on management, P1, P2, and then once it's at that +1, start focusing on capturing profit. And that wraps it up fully. Strategy 1, the advanced breakout, or strategy 2, the advanced breakout. So we covered everything here. We covered targets, we covered stops, we covered entry, micro time from trend change at around 0.3 to Fibonacci retrace more or better. And that's it for strategy 2, the IBL. Pretty simple one. And again, like I said, it's going to be one of the most common strategies that we have. And with that said, I will see you in the next video, strategy 3, the CBO, which is also probably my favorite, one that has the most confirmation. It's the cleanest. Happens also very frequently. So I'll see you soon. Bye-bye.